This is Lara at Elliott Wave Gold with your end of the week video analysis for US oil for the trading week ending Friday the 8th of February. I was expecting a little bit of downwards movement this week. That's exactly what we got. I'm expecting it to continue and maybe end early next week. The target for it to end is 50.91 to 50.82. When that's done, I'm expecting this upward bounce to continue to 63.71. The bigger picture still sees oil in a bear market, and so this bounce may present an opportunity to join the existing downward trend. This is my Elliott wave count. I'll do Elliott wave analysis first, and then I'll follow with classic analysis. Previously, my wave count saw a major low down here because from this high to this low, this downward movement fits very well and is very obviously a three-wave structure and not a five-wave structure. In Elliott wave, three-wave structures are movements against the trend. Five-wave structures are movements in the direction of the trend. And so with a big three complete down here, I expected that the bull market for oil was going to continue. However, now from this low to this high, this upward movement, it's quite difficult to see this as a 5 and very easy to see this as a 3. And so that means that the bear market for oil is actually incomplete. I was counting this as an incomplete 5. I was counting it 1, 2, 3, 4, 5. But as soon as what was 4 overlapped into what was 1, it was proven to not be a 5 and it was proven to be a complete 3. At that stage, I moved the degree of labelling within this big zigzag down 1 degree. I've labelled it cycle wave W, and I'm seeing it now as the first complete zigzag in an incomplete double zigzag moving lower for a big second wave correction, which I'm labelling super cycle wave 2. Double zigzags are actually fairly common structures, and so here's the first zigzag in the double. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a zigzag. X waves almost always subdivide as zigzags. Cycle wave Y is expected to be a zigzag, which should subdivide 5, 3, 5. Within it, primary wave B may not move beyond the start of A. The purpose of multiple zigzags is to deepen the correction when the first, or in the case of a third, when the second doesn't move price deep enough. To achieve that purpose, cycle wave Y would be expected to move reasonably beyond the end of cycle wave W, which is why I expect new lows reasonably below 26.06. Let's take a look on the weekly chart at how cycle wave Y is beginning from the end of cycle X up here, this point up here. It's begun with a 5-wave structure down for intermediate wave 1, and now I'm expecting a bounce for intermediate wave 2 to continue. Within cycle wave Y, primary wave A should subdivide as a 5-wave structure, and A waves, when they subdivide as 5s, are almost always impulses and very rarely leading diagonals. And so I am expecting an impulse to unfold for primary A because that's the most common structure for this wave. Impulses subdivide 1, 2, 3, 4, 5. At this stage I'm looking for the completion of intermediate wave 2 in coming weeks. It may not move beyond the start of intermediate wave 1 above this price point. When intermediate wave 2 is complete, at the weekly chart level it should look like an obvious 3-wave structure. So far, within it, a B wave looks like it's unfolding. When that's done, I'll expect a C wave up. It'll give this bounce a 3-wave look. Let's take a look at how it's unfolding at the daily chart now, where the low for intermediate 1 is this point down here. From this low to this high, this upward movement fits nicely as a 5-wave structure. I'm labelling that minor wave A within a zigzag for intermediate wave 2. Second waves almost always subdivide as zigzags, but they can be any corrective structure except a triangle, and so we need to have a little bit of flexibility as they unfold. So far this one looks like it's unfolding as a zigzag, which will subdivide 5, 3, 5. The structure here of minor wave B looks like it's unfolding as an expanded flat correction. For B waves, that's a pretty common structure. Expanded flats subdivide 3, 3, 5. minute wave C would be extremely likely to make at least a slight new low below the end of minute wave A down here to avoid a truncation and a very rare running flat. As soon as we see a new low below this point early next week, look out, minor wave B could be over fairly quickly. The target is calculated at 2 degrees. I'm looking for minute wave C to reach 1.618, the length of minute wave A at 50.91. And that's pretty close to where minor wave B would correct to the 0.236 Fibonacci ratio of intermediate wave 1. So a small target zone for a little bit of downward movement. Minor wave B may not move beyond the start of A if A has subdivided as a 5 below this price point. When minor wave B could be seen as a complete corrective structure, and that may happen quite quickly next week, I'll be expecting a resumption of this upward bounce for intermediate wave 2, and the target for it to end is the 0.618 Fibonacci ratio of intermediate wave 1. Let's take a look at some classic technical analysis and see if there is some support for that Elliott wave analysis, and there is. I don't have anything new to say at the monthly chart level this week, because the week of February has only just begun. This month. The month of January is complete. This is not properly a bullish engulfing candlestick because it gaps up above the close of this previous candlestick. It has closed well above the open of the previous month's candlestick though, and upward movement for January does have support from volume at the monthly chart level, and so that's bullish. RSI is neutral at this time frame. There is plenty of room for price to rise or fall. MACD is bearish but still above the zero line, so not full bore bearish. And the last signal on balance volume gave was a bearish signal. It remains below this resistance line, which previously provided support. At the weekly chart level now, there's an upward week with a slightly higher high and a higher low, but the candlestick has closed red and the balance of volume this week is down. Downward movement within the week lacks support from volume. That's okay. Doesn't mean that downward movement can't continue. The market could continue to fall of its own weight. And there's a slightly bullish longer lower wick, but it's not long enough to be more bullish. There is support here about 52 and resistance here about 55.5. At this time frame, ADX is now telling us that there's no clear trend. It's a lagging indicator here. It's based on a 14-week average. Previously, it was telling us there was a downward trend. It's now telling us the downward trend may, for now, be over. ATR is flattening off as price is moving higher. That's typical behaviour from ATR during a counter-trend movement. On balance, volume is constrained at this time frame. There's no new signal this week. This bounce has brought RSI up from oversold. It's back up into neutral territory. There is again room for price to fall. There's also plenty of room for this bounce to continue before RSI reaches into overbought. It's also brought stochastics up from oversold. It's now in neutral territory. Again, plenty of room for price to fall. Also, plenty of room for the bounce to continue. Stochastics is not yet overbought. At the daily chart level, volume on this day, quite importantly, was actively pushing price lower, and now the following day for Friday, a small inside day, lacks support from volume where the balance of volume was up. So there's a little bit more support in recent days for downward than upward movement. The short-term volume profile is bearish. That supports the Elliott wave count, which expects just a little bit more downward movement when markets open next week. I'll look for support about 50 here. ADX is declining after telling us the previous downward trend reached very extreme and remained very extreme for quite some time. Now, price is moving higher. ADX at the daily chart level has not caught up with the new upward bounce as a new trend. It is very obviously an upward trend at this stage, higher highs and so far higher lows. ADX is telling us the previous extreme downward trend may be over, and it's telling us there may be a trend change from down to up with a crossover of the DX lines, but it's not yet increasing, telling us there's a new trend. ATR is obviously at this time frame declining as price rises. Normal behaviour for counter-trend movement supports the idea that this is probably a counter-trend movement, and at this stage the evidence tells us not necessarily a new upward trend. The last signal given from on-balance volume at the daily chart level was bearish, with a break below support. A test of resistance at prior support moving down and away is also bearish. That's for the short term. RSI is neutral, almost exactly perfectly neutral. There is plenty of room for this bounce to continue, also plenty of room for a new downward trend to develop here, and at this time frame also stochastics is neutral. That's all from me with your US oil analysis, and I hope all our members are having a fabulous weekend.